Everyone who operates in modern society has to use our banking system. At some point or another, you're going to get involved with banking. Unfortunately, banking has infiltrated its way into pretty much every area of our lives, from transportation and housing to entertainment and education. It got me thinking, if this is something that most of us are going to have to engage with for the whole of our lives, I'm asking myself two questions really. One is, can the banking system be trusted? And two, is Wall Street a one-way street? Meaning, is there a way that I can use banking so that I can make money? Let's investigate. I'm randomly going to select 100 of you to receive your own gold-plated coin. I used to carry around a gold coin kind of similar to this one right here. Not to spend, but because it reminded me of wealth, and it was a symbol for me of what was to come and what I could achieve financially. As a thank you for your support, I want to give you a little piece of motivation to remind you of what you can achieve and the results that you can get in life. So, when this channel hits 500 subscribers, I'm randomly going to select 100 of you to receive your own gold-plated coin. These coins are real currency from around the world that have been plated in 100 mils of fine gold. Now, this might not make you rich, but it just might give you enough inspiration, as sometimes just holding a little bit of wealth in your hands can make you feel a certain way and drive you to go out and achieve the best results. My hope is that you not only achieve all of your financial goals, but also that you then take that knowledge and go out and pass it back to the world. All you have to do is hit that subscribe button, like this video, and you are automatically in the running. The German playwright Bertolt Brecht had this great quote, and he said, "If you want to steal money, don't rob a bank, open one." And I thought that was really cute, but it makes a point. See, this is how most people feel about banks, right? We feel that banks are stealing our money and maybe being a little bit less than reputable. It's pretty easy to see that banks are making an excessive amount of money. Go to any major town in any country and you'll see that the biggest buildings have the bank's name on them. So we know they're making money, and we know they're probably doing it off the sweat of our backs. But the truth of the matter is, what really is a financial institution? What is banking? Banking is a place where people would go to make deposits and store their cash and their wealth. They would go there for loans. Banks are going to give you loans, and banks are also going to extend credit. So at its heart, banking has always been a service business. I mean, going way, way back to the Medici clan and the banking of the early, 19th century, people are going to a bank and they're looking at it as a place to provide them with services, right? Banking services. But mostly the services would be a safe place to store your wealth, a place to go and get a loan if you can't afford to buy something, and for individuals and especially businesses, a place for credit to be extended to you so that you can maybe start a business, keep running your business, and meet things like payroll, buy supplies. So a place for you to go and get credit. Now, of course, a lot of this has changed over the years. Today, banking is not just a service business anymore, because it has become a little bit of a self-servant business, meaning the bank's number one goal now isn't really what they're providing to us, but to become an investment bank for themselves. Many banks just refer to themselves as investment banks, meaning what they're doing is they're taking our money and other monies acquired by investors, and they're just using it to turn a profit without actually providing, any service at all. Their whole idea now is, where can they park the money so that it can become more money? So banking has definitely changed, and unfortunately this has got them into some hot water over the years. I look back to the 2008 financial crisis which there were some major problems. But the banks had created all these different products. Sort of today, because they're becoming investment banks and they're having to park the money in a lot of different areas, when it comes back to the consumer and then serving us, they have to find new and interesting products to dangle in front of us to get us to use their services, because they still, well, need our money to make these investments. Of course, while making the investments, they're giving us a tiny pittance of an interest rate, maybe less than 0.5%, and charging us all kinds of fees and high interest rates on everything we're using the money for, on top of making their own investments, being an investment bank. In 2008, these financial geniuses that created a whole shopping list of products to sell us, things like financial-backed securities, CDOs, synthetic CDOs, mortgage-backed securities, credit default swaps, and, of course, tranches full of the worst-rated loans that you have ever seen, almost at a criminal level, but not quite, according to the law. So in 2008, we hit this financial crisis where they had sold all of these products to both investors and the general public. And when all the loans started to go bad, because these were just such flagrantly bad loans and bad products, they began to lose money. When they began to lose money and people started dumping them like crazy, well, this is known as a run on the bank, when everybody wants their money. However, you have to understand how a bank really works and how the bank could lose out. For many years, what banks had to keep in reserve is known as fractional reserve lending, meaning you put $1,000 into the bank and they could loan that out, but they had to keep between 3 and 10% on hand. Why? Because of a run on the bank. Not everybody is borrowing money. Some people need to come in and actually retrieve their deposits. Well, in 2008, those were still the limits, between 3 and 10%, depending on the size of the bank, meaning they could loan out on $1,000, $970, and make high interest on that while giving you basically no interest. Due to these faulty products and the market came crashing down on them, the bank was basically in turmoil. This started with a downfall at Lehman Brothers and basically trickled down to all of the other major banks, not just in the United States. This was a worldwide epidemic. The banks, in their infinite wisdom, went to the US government and said, hey, we need to be bailed out. We are too big to fail. This has happened previously in our economy, and it probably will happen again. But this was a pretty big bailout. The ask was for $700 billion in 2008. I'll say that number again, $700 billion, or the banks said they would be fully underwater and unable to recover. And the trickle-down effect would be massive because it would affect the public. See, housing was failing. Now, banking was failing. Housing was failing because of the bad loans. Banking was failing also because of the bad loans. So they had done this to themselves by creating all of these terrible, faulty products. Initially, the government said, no, we're not going to give you $700 billion. And, the banks gave them a day or two to think about it. But come Sunday, they said, listen, tomorrow is Monday, and we have to tell you something else. See, we insured all of this bad debt. When we tranched up these loans and we sold them to other banks and they hustled them all between them around the world, they insured them, and they were all insured by a company called AIG. Now, many of you do not know who AIG is, but the long and short is AIG is the umbrella company for many of the smaller insurance companies that you do know and use for, well, everything. Your home, your car, auto, healthcare, properties, many things are insured by smaller companies, but the parent company, the true company, the umbrella over it all is AIG. AIG had created policies that didn't exist before this time to insure these faulty products, because the bankers insured them that these were all AAA rated, and of course they were not. They had put a few AAA ratings on the top trying to sell them and just built trash barrels filled with garbage. So when this all failed, they basically said, if we don't get the $700 billion, then we'll be forced to try and collect from AIG. Well, AIG stepped in and said, we also are over insuring. We don't have the money to cover these losses, and AIG will fail. So the US government and the United States as a whole was looking at a catastrophic meltdown of epic proportions because housing was failing, now banking was failing, and now the insurance companies that protect us all would also fail. That leaves us vulnerable as a people and as a country, really, and recovering from that would have been catastrophic. So the government once again stepped in and bailed out these financial geniuses that had basically caused one of the worst financial catastrophes that we have ever seen. How it played out is that the Federal Reserve was watching all of this. In other words, banks have an overseer, and that's the Federal Reserve Bank. They're the banks for the banks. But the Federal Reserve gets overseen by the Board of Governors, and the Board of Governors gets overseen by the government. And basically, who was watching when all of this was happening? When these banks were making all of these shady chess moves that made them billions, but lost us billions, and then ended up costing the taxpayer, who was really watching and looking at all of this oversight? See, the Federal Reserve is really a private agency. They're really a private bank. There's 12 central banks, and they're private, the reserve banks. So technically, we can't look at their books. They say the Board of Governors has the ability to look at their books, but they've actually copywritten their books. So they're very protected, and none of that material can be reproduced and really even looked at under the scrutiny that a private person's account like you and I could be looked at. So these are the people responsible and really behind the financial catastrophes along with our banking system. So let's just look at what we know. We have the banks who have no money, who use our money and loan it out at high interest rates while giving us just about nothing back. If they make shady investments to benefit themselves and cost us money, then they could lose it all and they would still get protected and bailed out. The worst part about this is all of the people responsible for this said, hey, we need a few heads to chop, so we're going to have to let a few of you CEOs go. A few of the banks are going to have to fold into each other and merge. But all of the people who were kicked out the door, so to speak, left with bonuses. Out of the $700 billion, the banking system ended up using $431 billion of that, a lot of which went to just protect the banks, save their interests, and pay bonuses to the people that they felt they had to boot out the door because they needed a head. They needed a head on the chopping block to show that, hey, we've paid the price, and now these people who were in charge are gone. Of course, they were paid to leave, and they were paid millions of dollars, total of billions of dollars. At the end of all this, well, basically criminal activity, you would think someone had to go to jail. Maybe a few bankers and people at the top went to jail. Actually, out of all the banks, out of all the people who work for the Reserve, out of all of the Board of Governors, out of all the financial oversight committees, one person went to jail. One banker from Credit Suisse actually was handed a sentence of 30 months, and it was for concealing losses. I think all the banks were concealing losses. I think losses being concealed was why this whole debauchery began, because they were hiding what they were doing. And as they began to hemorrhage cash and lose money, the banks were headed and spiraling in the wrong direction. But one person went to jail. One person committed a crime. What we know is that if the banks mess up, there really isn't a price to be paid. Hell, they got rewarded with bonuses. The real price to be paid was by the taxpayer, because we had to cough up that $431 billion that they ended up using to save themselves and give themselves bonuses, while handing in the keys to homes that even if you were paying on as a renter, but your landlord was messing up on the mortgage because it was a bad loan, then you still were on the street. So it really, once again, is the end user, the person working the job, sweating every day, going to work, and you're the person who pays. So I think we've answered the question of, can the banks be trusted? But is there a way that in this system, which may be polluted and somewhat corrupt, but Are there any things going on within banking that could benefit us? Can we make money with the banks? Because after all, just because I don't want to go over the falls doesn't mean I don't want to get a cold drink of water once in a while. So maybe I'm going to have to get near those falls. How do we do that? Is it possible to crack the system? Absolutely. You see, banks still offer a plethora of products which are really great if you know how to use them. See, if you're using them in a haphazard and bad way, well, you're not going to benefit. The banks are going to benefit. But that same line, if you do not cross it, can actually benefit you in a great way. See, today when I go out, I travel, I'm not a big proponent of points or using credit cards or anything like that. I actually prefer cash. I prefer to use money I have. When you travel, one of the things that is convenient is to reserve your hotel room. They want to do that on a credit card, or put a deposit on a rental car. They want you to use a credit card. When you're traveling, there's so many areas where they just want you to plunk down that plastic because they feel safe with that plastic. So for that reason, it is good. However, when I make a bill on a credit card because I was traveling, if I have to go to Dallas for a show or I'm going to the East Coast for business, the second I get home, I get online and I see what that bill is, and I just make a transfer and pay it. I don't even wait for the bill to come in because they will figure out to tack on some kind of fee if you even let a week or two go by. The point is, I have access to that money and I'm getting to use that money, but I'm getting to use it for free because there's really no fee to speak of because I'm just going to pay it as soon as I get back. So it's a convenience thing, and the banks are offering this as a convenience. However, it could not be a convenience. It could actually be very detrimental if I use credit cards and racked up bills on them and then had to pay the minimum payments, which are going to be with obscenely high interest. So if you use credit cards, it's just pretty simple. Use them, but don't carry a balance. The balance is the problem, not the plastic. Like, maybe you're not a credit card person, but you can learn to be just by paying the balance. You made the bill. You spent the money. So pay the bill. Don't carry a balance. Another way I use banks is to get great interest rates. You see, you are going to buy some larger things from time to time. Pretty much the only things I use a bank for now are very large property purchases. When you're buying properties that's in the hundreds of thousands of dollars, 6 figures, 7 figures, then you are probably going to use a bank. And I'm a big fan of using the bank's money. However, there's the problem of the interest rate. See, when you borrow money, you're going to pay interest, and that's them making a little bit of money on my money. So I can remember a particular deal I did on the East Coast, and interest rates were 6 or 7%. But I chose to go with a hard money lender. They made it very simple, and it was out of convenience. But the rate was 9%. They wanted to do a 30-year loan at this 9%. What I did was I said, let's do it at a 15-year loan. And then I made extra payments. See, I had the money to do so I worked a little bit harder, and I ate up that loan. I ended up paying off that 15-year loan, which we squashed from a 30, and I paid it in 7 years, maybe just over 7 years. So in 7.5 years, I paid the loan, essentially cutting my interest rate in half. I was able to do the math and figure out that I had paid just over 4% when everyone else was paying 6 and 7, simply because of how I structured the loan and how I paid the loan back. So I've done this again and again. When you go get a loan, a lot of times you're thinking, it's completely based on the interest rate, but you're only going to pay the minimum payment. If you pay the minimum payment, then you're playing the bank's game. If you pay extra, then we don't care what the interest rate is as long as it's not obscene, but we're going to put a bigger deposit and we're going to make more payments, and you're going to end up eating that loan up. On average, if you cut a loan in half in time, then you actually cut the interest by about 54%. Of course, there's a lot of factors and math involved here because it depends on the load-in, what the origination cost is, what your payments, and how much of that money is going to interest only in the beginning. But on average, when we run the numbers, it ends up being 50% or more when I personally cut the loan in half. So in essence, I'm able to create any rate that I want. On a 7-8% loan, on some of them, we've paid them down so quickly and so fast, we've actually cut the interest down to 2.5-3%, which is amazing. Try and go buy a house for 2.5% or 3%. It doesn't exist right now. Another thing that I use to beat the banks at their own game and make a little bit of money is high interest savings accounts. See, years ago, for you to get 3, 4, 5% on your money, you would have to go to annuity. Annuities are a big load in. You have to usually start with at least 6 figures. And most people just don't have that. But with the new world, high interest savings accounts are a thing. Why are they a thing? Because the banks are trying to reel us back in and get our business. See, they still need our dollars. What's interesting is that they're reeling our dollars in, but I almost don't know why, because fractional reserve lending, after 2008, that crash was so bad, they started to reevaluate things. And our financial system almost imploded. So by 2020, they sat down again and said, we need to relook at this fractional reserve lending system. So you would think that if the minimums to hold back for a bank to keep in reserve were 3 to 10%, that they probably would say, all right, so we don't get in trouble in the future, maybe what we should do is hold back 25% or 35% and just lend out less and have more in reserves. But the interesting thing is, guess what they did? In 2020, they dropped the fractional reserves to 0. The banks can now loan out money they do not even have, and they don't have to have anything in reserve. Add to that our money is no longer backed by gold, because we took that away in 1971, and I was born into a world in 1972 that had nothing to back the money because they took away the gold standard. So money is no longer backed by anything. We no longer have any reserves, and pretty much loans and debt are just numbers on a ledger. So you go in and you need to buy a $30,000 car, and they're going to basically do numbers on a ledger and say, here you go, you owe us $30,000 with interest, mind you. They are loaning you money that doesn't really exist anymore, but make no bones about it, the money they want back is real money. You have to go to work and you have to make that money. So that money does have to be real. Now, when I use a high yield savings account or a CD, CDs are also great because that's locking your money up and maybe you don't have access to it on a daily or weekly basis. However, the CDs do give you a return, and that really helps you down the line because you're parking your money somewhere that's basically a savings account, and you know it's going to come back being more than when you dropped it off. So high yield savings and CDs are great. If you do have the money to get into an annuity, then I suggest you look into that, but that may be part of your long game and you need to have a little bit more equity to do that. The other way that I use the banks to my advantage is I use them to build credit. See, if you build credit even on a small loan, even on something like a used vehicle, doing that gives you a better credit rating with the bank down the line. Meaning, if you were to go in for a personal loan and your credit is terrible, even if they gave it to you, which they probably wouldn't, you'd be looking at a 12 or 13% interest rate. Whereas if you have great credit and you're a good credit risk and you have history because you've built it with the bank, then they're going to offer you a lower rate. If you then take that lower rate and pay on it early, you're going to dwindle that down to half as well. So the potential there is for you to borrow their money, use their money to get ahead, and down the line not have to pay so much for that money or pay a lot less than other people. The other thing I do with the bank is I use them to keep an organized ledger. Banks have spent hundreds of millions of dollars on their platforms online now. And years ago, I would have to go visit my accountant, or I'd have to go into the bank and have them download me a stack of papers and be going through things with a highlighter to figure out where we were and look at the books. Now you can do that online, and you can keep an organized ledger of your finances at the bank's expense. See, they want you to use that software. They've paid millions of dollars for that software, and you now have access to it for free. So using the banks as an organized ledger to keep track of everything you're doing makes your life just so much easier. And knowing is half the battle, because now you can see exactly what's going on. It makes you better higher with money. The tools are there. Finally, I want to mention something that most of you don't know about. It's called CMAs. CMAs are cash managed accounts. These are a financial product created by the banking system, but actually sold and issued to you through things like brokerage firms and investment companies. And these firms issue cash managed accounts. That's what a CMA is. And I love cash managed accounts. See, cash managed accounts is not a regular bank account. First of all, FDIC insurance is only up to $250,000 on a regular account. With CMAs, you can get a lot more protection, which is why people who have a little bit more money or the wealthy like to use cash managed accounts. CMAs spread out your funds so you're allowed to take advantage of much higher FDIC insurance. So you can insure millions of dollars or hundreds of millions of dollars by spreading it out, whereas you get a very limited amount of $250,000 FDIC insurance on an account with a bank. The other thing is you get higher interest. So CMAs offer much higher interest and it's negotiable. Also, they can give you dedicated investment accounts that are part of your cash managed account, meaning you're looking at everything in one place. I can look at my balance transfers. I can look at daily transactions. I can look at my investments and my cash portfolio all in one place. And I can move larger amounts of money. When I go to move money out of a bank, there's immediately a fee, there's a massive time lag, and there's a ton of paperwork. I usually have to go into the bank and say, I'm moving this to an account overseas, or I'm using this to buy some product overseas for my company. The process is just this long and tedious one, whereas a CMA, it's way easier, it's more streamlined, and you can do much larger numbers that happen instantly. Also, there can be no fees involved and sometimes very low fees. If there is a fee, it's going to be much lower because you have the CMA account. These are things that you can do to just level the playing field. The banks are playing their game, but just like anything else, the tools are actually all built in, whereas if you don't play their game, you play your game, you can use those tools to your benefit and easily level the playing field. My name is Daniel F. Margasa, and you are watching The Almost Criminal Millionaire. And if you want to learn how to level the playing field and have more health and wealth in your bank account, then please like and subscribe for more.